What banks are waking up to is over the next 15 years, there's going to be the largest wealth transfer in history.
It's already started.
It's already started. From baby boomers and Gen X to Gen Z and Gen Alpha. $80 trillion of wealth is going to be transferred to digital native generations.
Correct.
You know, these are people who are going to expect money and investments to be as instantly movable as a text or a video file. And, you know, blockchain really is best seen as a recognition that most money and financial assets are just digital information on ledgers.
Right.
But in the legacy world, there are lots of different ledgers that don't talk to each other. And so you end up with unnecessary friction and cost and intermediaries. Whereas this new coming generation is going to expect instant movement of money globally. And that's what blockchain facilitates. So, you know, the big story here is banks need to prepare for what this coming digital native generation are going to want, you know, from financial services. And at the most basic level, they're going to want access to digital assets.
Change is coming, and November 22nd, 2025 will go down in history as the day that it all started. ISO 20022 becomes the only standard for all major cross-border payments for banks all around the world. There's no doubt that one asset has been built for this moment and has been ISO 20022 compliant since day one, and that is XRP. And many asking, where do we invest in this technology? Do we buy Bitcoin? Do we buy ISO tokens? Do we buy stable coins for staking? It's not financial advice, but Franklin Templeton's top executive says the best investment in virtual assets is not Bitcoin, but the underlying infrastructure. And rumor has it this infrastructure is being tested as we speak. There was a $91 price spike on XRP on the Kraken exchange just recently. Exchanges quietly testing the future of XRP pricing for when ETFs and bank rails go live is the speculation by many. So how do you prepare to mitigate these price swings, going up or down? We will talk about this a little later on in the video, as well as other breaking epic crypto news. But as always, welcome back to the channel. I'm JR, your favorite crypto dad, and you know what to do. Give me a comment 777 down below if you're feeling bullish, if you're feeling blessed, and smash that like button, hit subscribe, and let's run into the video. Imagine being able to catch that $91 spike on XRP. There are posts circulating on X that some people had open orders triggered around $20, while others saw stop losses triggered. While there was a spike to $91, there was also a flash candle down to 0.002 cents. If that isn't concerning enough, maybe the European Central Bank warnings to its banks might pique your interest. Banks have been warned to brace themselves for unprecedented shocks and chaos. The European Central Bank told Eurozone banks that they need to prepare for major disruptions. They said banks need to be ready for anything without knowing what disaster will strike next. While they are pointing out geopolitical tensions, trade wars, things like that, they say to prepare, the European Central Bank wants banks to keep enough cash and reserves as a cushion to update their computer system to stay alert, pointing out that even the stock market could also suddenly crash because prices don't reflect how risky things actually are. Adding to this, European Central Bank's Olaf Slagman raises concerns over booming dollar-pegged stablecoins like USDT, USDC, warning they could threaten Europe's financial stability. With a 50% market cap surge to $310 billion, the need for a central bank digital currency is heating up. And while crypto has not been heating up lately, with many majors starting their retracement, XRP stands out with an 89% gain, as pointed out by CoinDesk here, compared to Bitcoin, ETH, and others muting their 2025 returns, falling to the lowest levels in 365 days. So is it the ETFs and the inflows keeping the price of XRP so stable compared to these other majors? And when it comes to these other majors, how much more worry do we have? Well, for the crypto investors anxiously watching right now, coming out of the Kobesi letter, since 2017, Bitcoin has seen 10 declines of over 25% or more, 6 declines of over 50% or more, and 3 declines of over 75% or more. Every single decline at the current magnitude or more since Bitcoin's inception has been followed by new record highs. This is a routine crypto bear market, which we believe is already closer to its end than its beginning. This is a great time to jump into Altcoin Pro University for a quick update on the markets. Again, the link is down below for Altcoin Pro University. If you're not familiar with that, I'll touch on it briefly in a moment. But first, let's jump into a market update. Bitcoin altcoin market update. I'm only going to highlight a couple of the main points here. Mainly that we know Bitcoin's going down, but that it did grab at $93,000 the CME gap, and it filled that gap all the way down to 91,000. We always say that CME gaps don't need to be filled. They do often get filled. Question is, where do we go from here? There's a lower level of support down at 83,000. Should we run down there? We've seen a little bit of excitement in Bitcoin's price just in the last 24 hours. There is still a lot of uncertainty, though, around the crypto market, around regulatory clarity, with the Clarity Act not yet passing. Also, with Fed news looking like they may be more hawkish than dovish. This update comes from Altcoin Pro University, where you're also going to be able to get crypto news, DeFi yield picks, altcoin picks, all pushed to your phone daily by our industry-leading experts and instructors. When I say instructors, I do mean that. These classes that are available in Altcoin Pro University, and more interesting lately has been the technical analysis essentials, as many people are coming to us and asking, how do I get into short selling? How do I learn how to swing trade in these markets so that I don't just need to buy and hold and dollar cost average all the way down? Looking to diverse their portfolio and investment strategies by getting into day trading. You are one of those people that's looking to learn how to day trade. Stick around for a couple more minutes. First, let's get into some market updates here. Take a quick look at CoinMarketCap, and I'll share with you guys on that one in a moment. CoinMarketCap, $3.12 trillion, the total market cap for cryptocurrency. The Fear and Greed Index is sitting at a 16, which is actually up a slight bit because we saw a small recovery in Bitcoin's price yesterday. Altcoin Season Index is sitting at a 29. It's actually showing a little bit more excitement while the market cap for altcoins continues to bleed, as we are currently at $1.29 trillion total market cap for the altcoin sector. Let's jump into the majors. Let's start off with Bitcoin here. We're talking about erasing all these gains for 2025 and jumping back to the lowest since the beginning of the year. Well, if you do take our $91,000 Bitcoin that we're currently at the time of this recording, and again, none of this is financial advice, simply informational, educational, and some entertainment purposes only. But we're sitting at $91,500. We did run down all the way to about 89 and change in the last 24 hours. And you do go back to the last time we were at these levels. It was in November 2024. We were at those levels. We were also at these levels after a little bit of a run up to the $100,000 peak in the beginning of the year. We came back down in the month of February, where we continued to run all the way down to our $73,000 retracement, retesting that previous cycle high and bouncing off of that before moving up to the newest all-time high. So the question remains, are we in a bear market? It looks like the 4-year cycle has played itself out. October 6th, as predicted, 1,064 days from the last market low, was exactly the high, which was predicted. And that's a cycle that's repeated itself every 4 years. And by that measure, we could still have some time ahead of us to run down to a new low for this cycle. But if the 4-year cycle has been exhausted and we're no longer following those patterns like many economists and analysts predict, we're actually moving into a 5-year or just decoupling altogether from the halving cycle, we look to be very close to the bottom of a bear market. Why do I say that? When we look at indicators down here like the 1100 moving average, on the daily chart, we have not gotten all the way back down there. And that's been slowly increasing from $72,000 to about $74,000 now, which would put us right to a retracement of the mid-cycle high low, right around $74,000. Should we go down all the way to there, we could expect that to be a pretty good guess at where we would bounce and start our next bull market. The question is, do we go that low? Should we continue to break to the downside? We've got support around $86,000, $83,000, even $77,000, $78,000 long before we get to $74,000. These are all areas that, depending on what's happening with institutions, the Clarity Act, the guardrails, and the overall retail investors, if we start to see money flowing in and money printing turning on, we could see a repeat of 2020 with those stimulus checks. People start putting their money into risk assets. In a macro picture, the good news for me is that we're either at or near the bottom, and I believe that we are going to be breaking out into a new bull market in alignment with a lot of economists that see a pump happening in crypto and stocks moving into Q1, Q2 of 2026. But let's jump into XRP, because that's what most of you guys are here for today. Currently, On my chart, sitting at a price of $2.09. XRP saw a spike on the Kraken exchange, only the Kraken exchange, none others, all the way up at $91. Is it possible that we could see that on other exchanges where there are arbitrage opportunities? No, it was on a 1-minute candle, and it was obviously a very rare thing. And we've also seen this with cryptocurrency exchanges, decentralized exchanges, when there's been updates being made and a decimal place is moved over. It's weird how it happens, but it shows up. But nonetheless, typically where there is a candle, there was moves that took place, right? So when it comes to XRP, many asking, where are we going from here? And on my chart, we see this upward trending support, this downward trending resistance, and this is running all the way back from the $1.77 retracement that we took after a big blow off top. Started in January, ran all the way back down into April. From there, $1.72, $1.77, somewhere in there, running upward trending support. Taking out October 10th as the anomaly that it was, now we see from the high, $3.66, give or take, right? All the way down, downward trending resistance to where we're currently running. Well, when you zoom in, that's where it really starts to get interesting. We are holding that support really well. We bounced right off of it on yesterday, daily candle, day before, daily candle, and today's daily candle have bounced off of this upward trending line of support. So to me, this indicates that we are moving in a narrowing wedge pattern. This would typically be a bullish presentation, given the fact that XRP has held up tremendously over the last year compared to the other majors who've already lost a lot of their gains, right? This is coupled with the fact that a lot of these tokens are being held off of exchanges. They're being held in cold wallets, and we're seeing inflows from ETFs. We haven't even seen all of the ETFs though. So if the price is this stable, chopping sideways with just those two factors alone, I'm really excited to see what's going to happen when the rest of the ETFs start launching. Does that mean that we could see a breakout from this narrowing wedge? And if we do, where do we go from there? Well, guys, it's not a price prediction, but since you're watching the video, let's go ahead and throw a measuring stick up and see what that could look like. Should we break out somewhere in there? It could put us, again, we've got to break through some areas of resistance first, but all the way up to a target of around $4.15, give or take. $4.30, somewhere in there. First place we're going to be looking for resistance is right around $2.61, $2.65. This is a green bar right here on my chart. After that, we've got some chop right around the $3 mark, $3.33 mark. I've said this before. I've got some targets in mind. We get up to $2.74. We get above that, I'm going to be selling some to take some profits. I don't think it's a bad idea, right? We get back above $3, $3.30 somewhere in there, I'm going to be selling more to take some profits. Because I think that at the end of the day, taking profits is more important than just holding and holding and holding forever. Leave your comments down below. Maybe you're an XRP maximalist that believes, just like Bitcoin maxis, that you just buy and you never sell. Not a bad strategy for some people, right? But that's not what everybody's after, and some of us are also after profits, right? So at that strategy, I would be holding a portion of my bag to move through those highs. Should we see this breakout, break above these areas of resistance and start approaching the $4, $5, $7 levels, whatever we could see. Question is this going to happen this year, 2025, before Christmas, or is it going to happen in 2026? Are we going to see a new Bitcoin high this year, 2025, before the end of the year? A lot of analysts coming out and predicting that we could still see that take place. If we see that, I guess we're probably going to see a pump in the overall rest of the market as well, a new altcoin season. It'll be a new world for crypto altogether. But if you really want to avoid all the stress of just sitting, holding, and waiting, and you want to learn how to make money in all of these swings up and down through day trading, I'm going to encourage you to check out the link for Breakout down below in just a moment here. This is a prop firm that we have partnered with. Many people taking advantage of the educational platform through Altcoin Pro University, taking advantage of the trading test through Breakout, learning how to trade properly, trading with less risk by using the prop firm funded bags, and you can see the gains on the leaderboard here. If this is something that interests you, I've got one more question for you.
What if you could trade with $100,000 without ever risking any of your own capital? Well, I'm doing it right now, trading a $100K funded account with zero of my own money on the line. I just paid a one-time evaluation fee to take a trading test. That's it. Because everyone's been asking us, how do I get crypto loans? Or how do you leverage trade without risking any of your own capital? Well, that's exactly why we're leveraging Breakout, which is a crypto prop trading firm recently acquired by Kraken with over 10 million clients, 2.5 million funded accounts, and over $1.5 billion in revenue in 2024 alone. They will fund you up to $200,000 after passing one simple trading test. And you get to keep up to 90% of the profit, and you can withdraw in USDC 24/7 after passing the trading test through the link in the description of this video. Now, here's the problem that I've seen most people face. Let's say you're trading with $10,000 of your own money. That's your rent, that's your groceries, that's an emergency fund. And one bad trade or black swan event and poof, your account is completely blown. Rent's late, savings is wiped, and your family is stressed out. So you're not trading to win. Trading your own money is trading for survival, whereas trading with 100K of risk-free capital is freedom. In fact, if you only have $10,000, you should never be trading with all of that. Instead, if you took just 10%, which is $1,000, and you buy the 100K or the 200K breakout test, and you pass the test, well, you're going to be trading with six figures without depositing or risking any of your own money. This is what I'm doing right now. And if you fail the test, you only lose $1,000 instead of your $10,000 because you shouldn't even be trading with $10,000 of your own money in the first place if you can't pass a simple $1,000 trading test. And the best part is there's no limit on retries. So that $1,000 can give you 10 shots at a 100K account if you fail the first few. That's 10x better risk management. And that's how you prove you actually know what you're doing. And this is the smartest strategy that the best traders in the world use. That's OPM, other people's money. You pass the test, you trade Kraken's money, and you get to keep up to 90% of the profits. And you can withdraw USDC on demand 24/7. So I paid, I passed, and now I'm trading 100K, and it only cost me $1,000 rather than risking $100,000 of my own money. And now it's your turn. So do not buy the small test. You're here to scale your portfolio fast. So here's exactly what you need to do right now. I left a link in the description of this video, and when you click it and select the classic one-step 100K or 200K account test, you simply click Start Trading, and then you enter in the affiliate code 777 on your checkout to get the maximum discount on your 100K or 200K funded account. And make sure to check the add-on box for the 90% profit split. It's only $100 extra. It pays for itself in your first payout. And if you skip it, you're leaving 10% on the table forever. So it's well worth it. Then you simply pay for the test, you pass it, you have an unlimited time frame, and you get to keep up to 90% of the profits. And again, you can withdraw in USDC anytime that you want after you pass the test. That's it. Now, we do earn a small commission when you use our code 777, but it supports value-based videos like this, and it'll help you get the maximum discount on your 100K or 200K funded account test. So click the link in the description right now, take the test, and let's get you funded.